Hey there, everyone. Welcome to this special edition of The Final Bar. I'm your host, Dave Keller. I'm joined today by Grayson Roze here at Stockcharts.com. We're coming to you again with what has become a monthly routine of our top 10 charts to watch for March 2024. It's been a really fun exercise. Grayson and I are often using the Stockcharts platform, scanning for ideas, looking at a bunch of charts every day. This gives us a chance to get together, sort of talk about the charts that we're finding, some of the patterns, some of the signals that we find most meaningful, some of the charts that we're going to be focused on over the next 3 to 4 weeks. Grayson, good to see you again. How was it this time around, sort of going through stocks? I mean, S&P not too far from all-time highs.
It is
easy or tough this time?
Little tougher. So,
yeah.
I mean, you know this about me. I like to buy breakouts. Not a lot of stuff breaking out right now. There's a lot of stuff.
A lot of extended names.
Extended,
yep.
Yeah. So trenders, yeah, a lot of those.
Yeah.
Breakouts, a little bit less. I'm a little concerned about this market. We got 16 weeks up of the last 18.
It's a lot.
That's kind of a lot. So
yeah.
I'm seeing that in the scans that I'm running and the names that I'm trying to find. That's been interesting, actually.
I feel like a lot of the charts that I'm looking at, a lot of the questions I'm getting, and I'm throwing out random things like Abercrombie and Fitch, ANF. Like there are a lot of these names that are just in these consistent upturns, like an NVIDIA kind of chart. And those are tough. It's like if you're not there now, do you jump in at this point after they've had a really good run?
Right.
But at the same time, that's I'm not struggling to find stocks that are going up, which is one other observation I would make.
Very, very
so
true.
how bearish do we want to be there, right?
That's true.
When you're looking at the market here, again, S&P and the NASDAQ not too far from all-time highs. Small caps lagging behind as they have for quite some time. You'd mentioned sort of getting nervous about it. Is that sort of what you're thinking in the month of March, is we're in a pullback kind of mode, or what's sort of your high-level sense of things here?
Yeah, it's interesting. I mean, seasonally, we do tend to see a little bit of weakness at this time of year.
Yeah.
I am still, in the long term, I'm still very bullish, and I do still love to see, small caps hanging in there, mid caps as well.
Yeah.
Not breaking down. That's a key to me.
Yeah.
It's such a divergence, though, between small and mid caps and large caps. What we're seeing out of the S&P 500 just being so extended. Like I said, the last 18 weeks, we've seen 16 of those 18 close higher in the S&P 500. That's just crazy.
It's a lot.
So it's kind of a weird mix of stuff that we got going on. I'm confident in some stuff. I'm a little worried about how extended we are in some other areas. It's a mix.
And I think this is one of those times where you have to sort of differentiate between the short-term, kind of the tactical risks, which I agree with. It's like, we've had an incredible run. It would be surprising to not get a meaningful pullback at some point. We really haven't had one yet in 2024.
No, not at all.
But the long-term structure certainly seems pretty strong.
Seems to be there.
We'll see which names we pick. I'm going to hazard a guess that neither of us picked Tesla, Apple, Alphabet kind of stocks, but maybe we're able to find some other ideas.
We'll see.
All right, I'm going to kick things off here with my first. We each have 5 picks to throw around. I'm going to start in the financial sector. I'm going to go with Keycorp. Now, there are a lot of regional banks I think we could pick, and I think the KRE is a good ETF, which kind of summarizes the space and where they're at. But financials are a sector overall, which I feel like the relative strength has been kind of underwhelming, and that's what's kind of prevented me from just shouting from the top of the mountain, get in financials. But when I was scanning for stocks making new swing highs this morning, I found a lot of financials, and it was sort of like the big money center banks. It was regional banks. Insurance companies certainly had been hot for quite some time. I think we've included insurance companies randomly in this discussion. But Keycorp strikes me as a regional bank, maybe sort of just earlier on. We mentioned a lot of things in extended runs. I was really trying to focus on things that just felt like they were a little earlier on in a breakout. And what I found with a lot of the financial stocks, they've recently sort of been in a consolidation phase. So Keycorp really rallied into a December peak. This was a bit of a concern. You probably call it an exhaustion gap, right? Which had a big run higher, one final gap, and then that's been the high watermark for the last 3 months, really. But then just this week, we're starting to see these names work again. The momentum is improving, but it's not overextended. It's not overbought, and so many things are overbought right now. So just simply finding stocks that are not overbought, I think, is a good exercise to have. But when I take a step back on things like Keycorp, and I would say there are a number of different banks we could swap in this position, the overall, they seem to be relatively strong but not overextended, right? Above upward sloping moving averages, momentum strong but not overbought. Relative strength, ideally would start to improve, and I think that's what I would be looking for in a chart like this, and that's why I think it's an important one to watch. Do these regional banks actually break above resistance and hold that resistance level? On pullbacks, do we hold the 50-day moving average? Does the momentum remain strong? Do we see an improvement in relative strength? But I wouldn't mind taking a shot at charts like this that are certainly not overextended by any definition, maybe just at the beginning of an upward swing.
Yeah. I love this chart, and it's a great example, like I'm always saying, draw more horizontal lines across your chart. This is a perfect example of support and resistance. Look at the lows back in 2022.
Yep.
Clear support. We broke through those. Now we've actually come back up to those levels, and it's really kind of been resistance for the stock. If Key can push above those lows from 2022, I think this thing has a lot of room ahead of it. Really nice pick.
Yeah,
I like
and a sector that's not been particularly outperforming, and that's where, again, if we do get more of a rotation away from some of the mega cap growth names, maybe it's...
But distributed strength within that sector, it's not just a couple of names that are working.
That's right.
You're seeing a lot of financial names working in that sector, which is nice.
All right, your first pick. Where are we going?
My first pick is something a little bit different for me. Kind of a little bit of the same, but also a little bit different. This is an IPO. I typically like to trade things that have a little bit more price history to them. Things that I can compare the weekly time frame to the daily. This is a little bit different though. This is Cava, C-A-V-A, an IPO from last year, kind of just starting to break out of its what we call its IPO base, right? Climbing its way back up to new highs since going public. Heavily outperforming the market. Since it's gone public, this thing has outperformed VTI, the total market, by about 125%. Absolute flyer of a stock, and possibly just starting to get going if it can hold this breakout level. Moving averages all trending in the right direction. We don't even have a 200-day moving average on this thing. That's how new it is. So again, a little bit different for me, but I love to see those moving averages. We've got the 20 above the 50 above the 100, just all pointing up, steadily trending higher. Great relative strength out of this name. And what's interesting about this too is restaurants and bars has been a space that I'm seeing a lot of names come through. Actually, when I put together sort of my initial list of 10 and tried to whittle it down to the 5 for today, a bunch of restaurants and bars on there. I had things like Darden and Yum, a bunch of different restaurants and bars names on that list. So Cava, one of the ones that I think is set up best from a risk-reward standpoint right now.
Yeah.
You can clearly manage your risk on a trade like this against those highs, against that breakout level. Again, draw those horizontal lines across your charts. But a really, really nice name. I like the price action here in Cava.
You mentioned a really interesting point there. You said you started with 10 names, then you whittled it down to 5.
Yeah.
I find a lot of times when, particularly with our scanning engine, which everyone should be using regularly, of course. The comments, I mean, I find people trying to over optimize and just get it down, and have a scan where it just has this list and you just buy that group. And that's not how I think either you or I use the scanning engine. It's like the scanning engine gives you the working list. And then it's up to you to sort of get it down to those actionable ideas. I think that's a really good way to think about it.
I'll pause here for just a quick second, kind of show this off. So in my own account, you can see these kind of at the top of my chart list here. I've actually got what I call my tier 1, tier 2, and tier 3 stocking lists. So everything kind of goes into the watch list to begin with, and I whittle that one down, move things into the stocking list, and then whittle it down even further to what I call my buying list. Doesn't necessarily mean they're things that I'm actually going to buy, but I'm moving things through these lists and doing exactly what you just said, whittling down. Those scans become kind of the driver of the working group. And then you kind of shift things through. So having kind of a multi-list approach, that's something I like to share with a lot of people. Really, really helpful.
I love it. All right. Cava's a strong pick, and I like that. It's an IPO name, which is unusual for
not a lot of those.
But it's a good chart, and it's outperforming, and I think that's pretty strong. All right, my first pick, we're going to go to communication services, and I'm going with T-Mobile. T-Mobile's an interesting one. Again, there's a similarity now with these first two charts. What I like about T-Mobile is the fact that it's recently pulled back to an ascending 50-day moving average. And for me, I like to keep things relatively simple. And one of those basic premises that I like to follow, stock makes a new high, it pulls back, which is totally normal, although we're not seeing as much as that recently on some leading growth names. But something like T-Mobile pulls back to an ascending 50-day moving average. The momentum pulls back, which makes sense, right? It makes new highs and it's overbought. And then it pulls back to a 50-day. The RSI gets down and doesn't really get to 40, kind of stays above that 40 level as it tests the 50-day and then bounces off of there. For me, that's what I would describe as a fat pitch chart, which is apt for T-Mobile because we live in a city where T-Mobile Park is where we play baseball.
That's true.
But a fat pitch is basically a strong long-term trend a weak short-term trend, right? So it's pulling back. It's a pitch right over the plate. You probably want to take a swing at it. And this sort of setup, I mean, and again, when I think of my ideal setup, this is one of those, which is strong trend, weaker short-term, which gives you an opportunity to get in and buy on the weakness. And what's happened now is it's actually followed through quite nicely. This week, it's actually spiking higher pretty well. But it's still very early on, I think, in the move that could be had, given the strength of the trend, given the fact that we keep making higher lows. And what I also like about this is that pattern of higher highs and higher lows really defines that uptrend. So, as long as that trend continues, I think you want to stick with a name like this. A lot of times I find one of the worst things you can do is sell when something's up like 20%. And then sit on the sidelines as it goes up another 200%. And sticking with something like this as it keeps working, as it makes higher highs and higher lows. And T-Mobile, now making a higher low, and now today making another new high. I think that's a pretty decent setup coming off of a pretty actionable buy point.
Absolutely. I got to ask you a question on this. So when you say a fat pitch chart, is any of that the actual company that you're looking at? I mean, I'm comparing T-Mobile, huge company, not that many choices out there. Obviously not a company that's going to disappear tomorrow. To something like Cava, that's completely, new kid on the block, unproven. Is any of the fat pitchness, the name that you're actually looking at?
Yeah, no, that's a really interesting point. I mean, I think for me, it's all about the consistency of the trend, right? So the first part of that is you have to have a pretty strong move, which means the only stocks that even get into that filter are sort of quality names, right? Or at least perceived quality by investors. I mean, like some of the names that have rallied are arguably not great earners, but they've had consistent uptrend. So it has to start with a well-established uptrend. And the idea here is you're buying short-term weakness within a big picture rally, right? So you're finding companies that overall, the proof is in the consistent performance. You're just buying at the lower end of that channel, and so I think that's the general idea.
Yeah, I like it.
Let's get to your pick number 2. Where are we going?
Pick number 2 for me. I got some funky shoes here. Crocs, CROX. Another nice breakout. Kind of getting shot down, I will say, right now. I like to use actually the horizontal line indicator. I'm always talking about drawing horizontal lines across your chart. So I actually build those kind of into the template. You can see that actually down here in the settings area. I've got these horizontal line indicators that are actually part of my chart settings. And so whenever I'm interested in a trade or something's on my watch list, I want to actually put that price level that I think is an interesting entry or a key area to watch. I actually put that right into the chart. So in this case, you can kind of see where my ideal entry on something like Crocs would be. That's going to be that dashed green line. Getting shot down a little bit, but we are pretty extended over that 20-day moving average, and we've seen a huge move out of this thing in a pretty short period of time. So that actually doesn't really concern me. Again, this is charts to watch for the month. If Crocs can keep pushing higher, if we can see that relative strength line keep pushing higher as well, if this is a name that can keep outperforming the market, interesting name to watch. What I also like about something like this, if we pull up the longer term weekly chart. So here's a 7.5-year weekly view look at Crocs. Very similar. We got our relative strength line up top. We got a couple of moving averages. This is a thing that can outperform hugely. Just big outperformance can come out of this name. You can see in its history, it's outperformed by, we can actually zoom in on that, 438% over the last 7.5 years, Crocs. So this is a name that has the potential for heavy outperformance. And when I look at this on the weekly, again, if you kind of draw that horizontal line, if we can push above some of those key levels, we really have a lot of room to run there on this chart, up above. So sort of an interesting one to watch on the daily and on the weekly, kind of breaking out on 2 time frames, starting to outperform the market once again. And if we can see that line start to pick up, if we go on a run like this, we can see Crocs really put in some huge gains. So that is my next pick, funky footwear.
I like that pick. The weekly chart, especially, by the way, really shows, I'd probably label it a symmetrical triangle pattern, kind of this big consolidation. That's a multi-year consolidation, but really coming in and just to the upper end of that. So if it does get above your buy point, that would also exit that price pattern, which maybe kind of further validate
if you draw a line, a downtrend from this high to this high, you sort of draw that across, and then draw an uptrend from this low to this low, you've got those two converging. And again, if we can push the stock up from there, kind of from the bottom with that uptrend, I could have a lot of room to run above it. So
good price alert to set, which I will do after we're done.
There you
That's
go.
a great good stock. Chart number 2, Crocs. All right, my third chart. This is one I'm pretty sure has been on the list before, and if not, we probably meant to. Costco. Now, in the introduction, we talked about how we weren't going to pick things that were too overextended. I couldn't resist, only because I think, to be honest with you, if we're really thinking about charts to watch, these names that have been consistent performers, I think the biggest risk for a market like this is that the names that have just been working consistently stop working. We mentioned like an Abercrombie and Fitch, Nvidia, and I'm randomly picking Eaton Corp, maybe, like names that have just been in these uptrends. And at some point, that there has to be a break, right? And I think the pullback scenario for the major benchmarks probably would mean Costco takes a breather of some sort. February was actually an incredibly strong month. After January was a strong month. After December was a strong month. So it's had a really consistent run. And I think, to be honest with you, is this an early stage breakout? It isn't. Would I be happy allocating some capital to a name like this, even though it's had a run? I probably would, and only because that argument that it's overextended, we probably could have made that a month ago and 2 months ago and maybe even 3 months ago, right? I mean, the reality of some of these persistent winners is that they keep going higher. Yeah. And if you miss out on a name, I don't think there was a moment where you could buy Costco and now you're pretty much done. Thinking of what sort of exposure you could get here, how you manage the downside risk if there is a pullback, I think is an interesting way to think about it. But there are a lot of names like this that I think, as long as those trends continue, it's hard to describe this as any sort of bearish market environment when some of these charts are continuing to work to the degree that they are.
Yeah.
If things really get ugly, a Costco is probably going to struggle. It would probably outperform some of the names that are gonna get torpedoed on the way down. And so it'll have good relative performance. But for now, I think watching these consistent winners to see if there's any break would be important. The final thing I'll say, just an observation on the momentum. The RSI is above 80, and we always used to call that the good overbought, right? An RSI just above 70 was sort of overbought and watch for a pullback. When you get an RSI above 80, that usually means it's more something like December, right? Which is like a brief pullback before you make new highs. It's like the momentum's so strong, there's probably more to be had above these current levels. So again, when I'm thinking about actionable charts, this probably isn't one, and this is the type of name I would probably look for a pullback as a short-term entry point. But again, just sitting on the sidelines and watching this thing continue to compound to the upside, it's really tough to do. So having a couple of these names that you get exposure to and riding them as long as you can, I don't think I have a big problem with that at this point.
Yeah, I love how steady this is. I look at a chart like this and I think about my first introduction to technical analysis. A lot of people know my dad was a trader and has written a lot for Stockcharts and things like that. So when I first started learning about technical analysis as a little kid, he gave me a pink highlighter. He said, draw trend lines. Is this going up? Is it going down? Is it going sideways? I look at a chart like this and I think back to those early lessons. What's it doing? It's going up. What do you want it to do? You want it to go up. Well, it's going up. So maybe just hold your nose and buy it. I mean, great names like Costco continuing to trend higher. There's a lot of demand for this thing. The RSI, I mean, everything, the trend out of it. Just a beautiful, beautiful name right now.
And all the big box retailers have similar kind of patterns, like Walmart. Target was an earnings name recently
big earnings
that
out of
popped
Target.
higher. And so I think all those are good. But I think, to your point, there are a lot of things you can use to sort of qualify that uptrend and make sure that it's still going. Trend lines, the chandelier exits, moving average techniques. I mean, there are all sorts of things you can do to get a clear signal when that trend is no longer in play. But for now, a Costco's still going up, right? Get out when it stops going up, not when it is going up.
Anyone who is thinking about this name and saying, no, you got to wait for a better entry, go look at a chart of something that you and I were talking about before the show, ANF, Abercrombie and Fitch, which has been steadily trending for months on end. If Costco can do a similar thing like this, it's probably early in that kind of move.
And that first breakout was back here in June of last year, and then look at all these other new 52-week highs we had.
Trending. I mean, if Costco has a path forward like this, then we could still be early in that run. So
there we go. Your third pick, if we could.
My third pick, we're going to the industrial space, one that I love right now. We talked about kind of the distributed strength and financials, distributed strength out of industrials, maybe even more so. That's one of those corners that has so many names in it. The equal weight sector ETF for industrials has been absolutely flying, has been steadily outperforming because that strength is just so widely distributed amongst the sector. So lots and lots of great names in the industrial space right now. We're talking home builders and things like aerospace. I almost picked ITA, which is the Aerospace and Defense ETF. That thing on a weekly chart looks fantastic. But I thought that again, the risk reward here on HXL was just a thing of beauty. So that's my next pick, Hexcel. Beautiful horizontal line here. We're breaking out to new highs. I do want to see the relative strength pick up. This thing has actually been underperforming for quite a while, but that makes sense because it has been basing for quite a while. This is a beautiful base within a broader uptrend. So if we can see this thing now push above to new highs, I think that relative strength continues. We see it start to outperform the market again. When I see a name like this refusing to break down and then finally testing those highs once again, that's the type of thing that I look for. That's buyers stepping in to say, no, we don't want this thing to break down. We want to send it higher. So I like what I'm seeing here. Moving averages starting to pick up. I do want to see that 100 get above the 200. And I want to see us consolidate a little bit around this breakout level and then kind of shoot higher from there. I'd like to see a little more digestion around these highs. We've only tested these levels, again, kind of once in the last year, really. So would love to see a little bit more consolidation out of this thing. But I think the space, again, it's got a lot of strength coming sort of from its brothers and sisters in the space, industrials, and in aerospace and defense. Beautiful breakout. That's what I like to find.
I feel like this time around in particular, it was tough to focus. Once I found a group at times, it was tough to focus, or a sector. Even industrials, as we mentioned, I made notes this morning. There were, just a ton in different groups, trucking names, railroads, aerospace.
Like we were saying with restaurants and bars too, so many names out of that space.
There are a lot that look constructive. So I think with each of these are probably representative of a group that are probably worth a closer look.
Great way to think of it.
Good chart. All right, my fourth pick. This is one I feel like you've picked before, and if not, it definitely strikes me as a Grayson name,
good pick.
Airbnb. So this is one, and full disclosure, we were sort of comparing notes on our picks. I changed my picks, I think, 4 times this morning. Just as I continue to review and I'm finding different things, that's the nature of what we do, I think, in some ways. But, when I'm looking at Airbnb, this strikes me. We talked earlier about, I think this is a good counterpoint to Costco and Abercrombie & Fitch. Those are extended names. They've had incredible runs. I still think they're good trends until proven otherwise. They're innocent until proven guilty. Airbnb is one that strikes me as way earlier on in the move. This is what I would probably label as an inverted head and shoulders continuation pattern, if you care about pattern labeling, because an inverted head and shoulders pattern is really something you more find at a major low. But this is one that's actually had a good run. It made a new high in July, and then had this inverted head and shoulders pattern. The neckline is pretty clearly defined, and we sort of consolidate around that, and then just in the last week or two have finally broken out of there. So if you very simply just take the height of that pattern, 115 to 150, we'll call it, you project that from the highs, and we're going above the upper end of the page here and retesting the highs from early 2022, just if that pattern would project even further. So I think that's pretty constructive. And what's happened in the last couple months, the momentum has improved, right? So we were sort of getting into the oversold region. Now we're not. We're sort of in more of a healthy bullish range for the RSI. The relative strength is starting to improve. It's making a new 3-month relative high this week. And so travel and tourism as a theme, I think, has been pretty impressive. And I've been tracking names like hotel names like Hyatt and Hilton and others that have had really good breakouts.
Marriott.
I think Airbnb is sort of within that general theme, which is sort of that travel theme, which, having just come back from a trip, airports are pretty jacked with people going around, and Airbnb seems to be capitalizing on that. And overall, again, I like in a time when it feels like things are very overextended, it's refreshing to find names like this that are just breaking out early stages of a base here.
Yeah. I think it's important to remember that we're kind of still coming out of the whole COVID period. A lot of people locked down, a lot of people not traveling, a lot of people that haven't seen their family in years. And so something like Airbnb, where you want to go, take a family trip, do a family reunion, get a big house, maybe a couple of them, next to each other, something like that. I think Airbnb's got a bright future ahead of it, but a great chart technically right now. One thing that's nice too, if you ever talk to Greg Schnell, kind of the leading scooter expert probably in the world. He would always tell you anything breaking above 75 on the scooter is kind of just where things start to run.
Yeah,
he always said he likes to find things that are breaking out and the scooter is just crossing 75 and moving higher. This is doing exactly that. That's the first thing that catches my eye on this chart. It's the scooter right around 75 there.
It's so, I mean, and the scooter rankings, proprietary ranking that we run, but it really is an exercise in relative strength, right? Because it's a percentile ranking, and you're looking at the best trends relative to all the others. This means it's in the top quartile of stocks out there based on their trend, large cap stocks, right?
Great pick, great pick.
We'll do it. All right, your fourth pick, if we could.
My fourth pick, we're jumping to healthcare, which is a very interesting sector. Healthcare is such an interesting mix because it's got a blend of offensive and defensive. You and I talk a lot about offense versus defense kind of ratios, consumer discretionary versus staples, for instance. One that I like to run is biotech versus the healthcare sector overall. Because healthcare has a couple of different kind of corners in it. It's got things like biotech that are very growthy. It's also got things like pharmaceuticals that are kind of more of just a plod along, or healthcare providers that are just kind of plodding along. Companies like Johnson & Johnson, for instance. So a little bit of a mix in there. Medical devices, medical supplies, an area that has been, again, coming across a lot of my scans. I've seen a lot of names, ticking up to new highs, steadily trending higher. This is one that I really like right now, which is IDEXX, IDXX. Kind of a multi-time frame thing for me here too. We'll take a look at the weekly in just a sec. But on the daily, again, you got a nice breakout. We've actually made that breakout. We've consolidated a little bit. We're kind of digesting those gains. And what you're seeing now is a little bit of a bounce off the 20-day. I like to see that, and I like to see this relative strength overall. Now, again, we've kind of taken a pullback a little bit. We've cooled off. We're digesting some of that move to the upside. But if we can see this thing resume that move, actually catch a bid here off sort of the 20 and the 50, move higher, this thing I think has a lot of room to run ahead of it. If we look at this on the weekly chart, I think this is also where I really liked it. Again, a nice breakout on the weekly. If we can take out some of those highs and resume this kind of longer term uptrend here in a name like IDEXX, we've been consolidating for a couple of years on this name, backed by some space, backed by others in the group that are also doing well. Lots of love on this thing. And look at that. Again, a name that has the potential to really heavily outperform. This hasn't outperformed the market by 5 or 10% over the last couple of years. This has outperformed the market by 93% over the last 7.5 years. And that's with multiple years of actually declines and consolidation, sort of digesting that long-term uptrend. So I like to find names like this that, again, fit onto multiple time frames. Really, actually, a great use of these style buttons over here on the left. You can assign those different time frames to these buttons. So again, I can flip between the daily and the weekly. I can actually jump out even to a 15-year weekly. We can look at the long-term trend on IDEXX and really get a perspective on that consolidation that we've seen in the last couple of years. So I like to find these names that are, have a history of winning, and they've been consolidating, now starting to resume that move to the upside.
I feel like so often we get caught up in the short-term price action. This is, a 15-year chart. You can see the long-term history, right? And just the compounding you're able to achieve with stocks like this.
Exactly.
It's pretty impressive.
Exactly.
It's interesting. So I have to ask you, so on the daily chart, the RSI on my chart, RSI is sloping downwards. We have a divergence.
Yeah.
This is something that's happened on a lot of names recently. And what's notable is that most of them have just ignored that altogether. I feel like it's a sign of strength in this market, is that divergences that normally would feel kind of toppy to me have not played out, and you haven't had the breakdowns that would sort of validate, yep, that was a top. And I think that's sort of the key, right? Is that as long as we keep going higher, the chart remains constructive, right?
It's a good argument for price first, right? Indicators are important. We got to keep an eye on things like the MACD, things like RSI, Chaikin money flow, all of that good stuff. But price has to come first. You got to think about the actual price action of the symbol first. So for a name like IDEXX, it's been consolidating for a little while. So we've seen some things like RSI kind of pull back. We've seen a lot of consolidation in moving averages, all of that stuff. But again, price first. And if you actually take a look at it, it's sort of digesting that breakout, hopefully going to catch a bid and bounce higher here. But again, that price first mentality, I think, is a good time to remind people of that.
Totally fair, and I totally agree with the little the chart style buttons on the top on the left, which I absolutely love.
Great feature.
And then the little icon next to the title where you can switch to the other chart styles as well. I've been using all of that aggressively, I would encourage everyone to do the same.
Yep.
All right, we're to our last pick. So my last pick is actually going to stay in the same sector.
Interesting.
And this one, I had to. We call this technical diversification or pattern diversification, right? I often find a lot of very similar charts, and I think, okay, let's look at some other opportunities. So I intentionally looked for stocks that have been going down quite a bit, and they're just starting to turn higher. And the way I did this using the scan engine, I created a scan looking for like 12-month returns that were a little more negative, but that was making a new 3-month high. So I often look at 3-month highs and find stocks that are, have already had a run. This one I particularly were looking for things that are going down. And two ways I would do it is look at like a 12-month return that is a low number of some sort. It's below the 200-day moving average. Some way of just sort of validating it's kind of going down, but then it's not going down at the moment. Mm-hmm. And it struck me that within healthcare, where I'm finding a bunch of names that are rotating higher, a number of biotechs, medical supplies, medical equipment, 100%. It struck me that Bristol Myers Squibb is actually making a new 3-month high today as we're doing this, up about 3% today.
Wow, nice.
Now, this is not my sort of basic buy candidate. I would say if you gave me 10 charts that looked like the ones I've shown you, and this is number 10, I'd probably rank it 10th. But I do think if you are more of a value-oriented investor, you're looking more for beaten down names that are starting to change their tune, I would say BMY is a good example of that.
Yeah.
And I think the things that attract me to this from a technical perspective, it's not the relative strength, which has undeniably been down because this is a stock that's been going down while most other things have not. But if you look, we have a double bottoming pattern. So it hit a low around 48 back in November. It basically just retested that low in February and then bounced higher. That was sort of one thing that I noticed. The second thing is this, this week I'm looking for a break above that January peak. We're just finally doing that today and getting above there. And I think again, I mean, when you have this sort of initial break, I would always look for a follow through and see if it can continue to see additional buyers come in. But overall, that's good. I think what's most impressive to me is that the momentum has completely changed. So if you look back here in November of 22, we're overbought. That's the last time we've been overbought until today, right? After that, all these little rallies, which are clearly counter-trend rallies within a downtrend, the RSI stalls out around 60, and that's really what a downtrend looks like, right? Is you're sort of, the whole shift in momentum occurs. And then you're looking for when we rally and it becomes overbought, because what that tells you is enough buyers are coming in to actually start to change the character of this chart. So I think it might be earlier on. This is the kind of chart, based on how I invest, I might take like a half position at this point and then wait for like a break above the 200-day as validated, this is definitely going higher. Maybe a higher low is when you would scale into it and complete the position.
Yeah.
But overall, when I'm looking for names that are in downtrends, I just wanted to show that there's certainly ways you can scan for these types of patterns. I personally like to look for some signs of accumulation. I think we might be seeing that with BMY here.
Yeah. Well, depending on your time frame too, there's an interesting income play. You've got a feature turned on your charts, the full quote. Yep. So you can see up there, it's a good opportunity to pick up some yield. This thing pays a nice dividend. Yep. So especially, again, depending on your time frame, if you think this is kind of a bottoming phase for BMY and you can pick up some yield there with that dividend, you got an interesting income play and some price appreciation potential out of the stock if it does manage to put in a bottom. So interesting name. That's a fantastic, super constructive pattern. I like that.
So we'll see, and that's why I think watching it in March, I think would be key. See if we continue to see accumulation there. But the fact that we're seeing a lot of good charts in healthcare, maybe it's a catch-up play for something like Bristol Myers.
Right.
We'll see.
Well, also, if we do see the market kind of take a breather here, take a step back, we might see a little rotation into some more defensive, historically
and some
sectors.
higher yielding names.
Yeah, exactly. So this could catch a bid. I like it.
All right.
Good name.
Your final pick.
My final pick is not going to be related to healthcare at all. This is going to be Monster Beverage, probably the least healthy thing that you can drink.
But the only staple that I think, the only consumer staple name we're going to share
The only
today.
staple.
Okay,
I got to say, this kind of makes me laugh thinking that Monster Beverage is a staple. Energy drinks, I don't know if those are really similar to toothpaste here, but technically is a consumer staples name.
Yep.
What's crazy about Monster Beverage, if you look at the last 20 years in the S&P 500, I think this is the second best performer, only behind Apple. One of the best performing names.
True?
Yeah, it's one of the best performing names in the S&P 500 over the last 20 years. Crazy performance out of this thing.
Yeah.
If we jump, for instance, to that 15-year chart here, you can see sort of the scale of that move. But we're actually missing a whole bunch of years on the left side. So if we pulled that back even further, This is an absolute flyer of a name. Again, the idea there is that this has the potential to outperform. It's done it in the past. It's got kind of a history of winning. So when I see a constructive pattern on the daily chart, I like to keep that kind of history of winning in mind. Again, good breakout opportunity here. If we do see the market cool off just a little bit, maybe a little rotation into areas of the market like staples, a little bit more kind of a defensive play there.
Yeah.
Things like Monster, could catch a bid. But again, I like the breakout on this. Longer term, this thing is heading up. We can see those moving averages, clearly indicating a longer term uptrend. Been consolidating here for a little while. I want to see the relative strength pick up on this thing. This is similar to the last chart we looked at, where it's been sort of in decline for a little while as it's consolidating. Makes complete sense. But if we do make this breakout, I want to see that relative strength pick up. I want to see this thing actually outperform the market on the move higher when it resumes. So a couple of things that I'm watching there. But, a nice horizontal line to draw across Monster. Has a good history of winning, a good kind of long-term uptrend that you can play. And I think it sort of says a lot about where the market could be going here, too. If we see a little bit of rotation into a defensive space like staples, but we also see kind of more growthy defensive names, if you want to think about it that way, like Monster, actually kind of start to work, kind of tells you something about the risk appetite.
It's such a great way to finish this. I mean, things like coffee, energy drinks, if the market goes down, you're probably still going to want to have your coffee in the morning. And I feel like if you're into Monster beverages now, you're probably going to be into them if we go into a major recession too.
Yeah,
which is why staples like that tend to be pretty resilient in a market downturn. When you keep talking about the horizontal line, and I think on this one in particular, when you do get above that line, which basically means we're breaking out of this big consolidation phase, all that means is that big 15-year plus trend we've been talking about, this is like the latest step forward. It's like the latest step up the staircase in a multi-year trend, which is what...
It's exactly how I like to think about it.
Yeah.
Stair steps, right? You see it go sideways, you see it go up. You see it go sideways, you see it go up. Drawing those horizontal lines allows you to kind of define that staircase.
I have to ask you, so we're not doing a mailbag this week on the final bar, but the mailbag is open. We're getting a lot of great questions. I've had a number of questions about volume recently. I don't use volume very often at all. As a matter of fact, I never even show them on my charts on purpose. And it's not part of what I do. Your charts have had volume included there. Can you just answer that question? How do you think about volume relative to all these other things we've talked about, price, moving averages, et cetera?
I've had some interesting conversations with Jay Woods, who's a floor trader for a long time, good friend of ours. Jay does not use volume either. And I picked his brain on that. He had a ton of reasons, more than we can get into in the show. But he basically said the volume game has changed. With all of the algo stuff now, with just the participation in the market, with ETFs, there's so many factors that have changed what volume means to him. And more after-hours trading and different things. So volume, I think, has become less and less important to me. I do still like to see it on individual days, though. If you see a huge up move out of a stock and it doesn't really have any volume that's coming in, I think that tells you something. So I don't really use it in the aggregate. I use it kind of on a more single candle kind of basis. How has the volume kind of been this week? And it's just another signal to me. But I'm not going to trade something because of the volume, and I'm not going to not trade something because of the volume. To me, it's just kind of another factor in the mix there.
I think that's a really good answer. I think of it similar to like candlestick charting. I mean, most of the charts that I use are bar charts, but on the show, I'll randomly bring up a candle chart. So one of those where I'm kind of keeping my eye open, and if it's something that catches, like it's a significant pattern, it's like, okay, this is an actionable thing that helps me sort of understand the environment. But my average go-to, it's not like I'm a candlestick trader that looks at other things too, right? I'm looking at sort of and I think that's a good lesson for everyone watching, right? You sort of have your core toolkit, your main steps you're going through, and then you have these other things that maybe help you paint a more complete picture, or if you're unsure, maybe look at that supporting evidence and see if it agrees.
If I've still got the screen here, we'll pull this up. This is CrowdStrike, which is a name that you and I were talking about earlier. A really interesting example of this kind of stuff. So you've got a candle that is solid black. That means that this thing has gapped higher at the open and then has pulled back during the session. That tells you something about supply and demand, right? And the same with volume. You can use volume on a candle like this to say, okay, we've got a huge jump, gap up in the stock. Is the volume picking up too, or is it just kind of an average day? Now, in this case, we've got a lot of volume coming in on CrowdStrike. But their candlesticks, volume, different things like that, even indicators, seasonality, all of that stuff, it's a factor in kind of a bigger picture. So that's how I think about stuff like that.
This was fun. We'll do
This
it
was
again,
very
shall
fun.
we?
Always.
Appreciate it, Grayson. That's Grayson Roze, who's here at Stockcharts.com. I'm Dave Keller here at Stockcharts as well. A lot of fun going through the top 10 charts to watch in March. As a reminder, the way we came up with these names by using the scanning engine on the Stockcharts platform, thinking of some of those characteristics of leading names, some of the opportunities we like to find, coming up with a working list. And I think go back, rewind to Grayson's comments about how he does that tiered approach. I think that's great investing wisdom on how to start with a larger group of things and then refine it down to an actionable list. And then those are your buy and sell candidates once you get it a little bit further down. For Stock Charts and Redmond, Washington, I'm Dave Keller. Be well, stay safe, take care.